We want to welcome our audience to the Beyond Borders online event. This special meeting is presented to you by SmithWeekly Research. Our event today features two gentlemen from the accounting tax strategy side of finance and economics. Our event today, both are certified, our guests today are both certified public accountants whose firm offers various accounting, tax, and finance support services. We appreciate them taking the time with us today and their ideas, insights, strategies, and to tell the audience about their businesses. I am the event host, Andrew Weekly, founder and CEO of SmithWeekly Research. And once again, welcome to the Beyond Borders special event. We urge the audience to allocate attention to the on-screen notes here, as well as the event notes under the screen viewer for more important notices and details about this event. We further call your attention to the notices on the screen here regarding the Circular 230 notice, as well as to inform the audience that you should seek your own professional advice. Before we get into our guests today and the meat of the discussion, I want to lay out for the audience what they should be considering more so now than ever, the beyond border concept that we are outlining with this event. What we are seeing today in global finance from a political, social, and economic perspective is an unprecedented set of experiments that we have not seen in modern times, although many characteristics could be identified in historic examples. One of the best being the history of the rise and decline of the Roman Empire. More symptoms are showing that really point towards social collapse and this growing effort to try out old concepts that are perceived as new, regardless of history telling us that these end ideals lead to a reset of everything. It starts and ends with unsound and sick understanding of economics, which is the problem. So no policies are in place to repair the fiscal issues that exist, and nothing is being done to sustain methods that really do work. So instead, the ultimate cost and dilution will follow, causing the majority of people significant financial stress, most likely, which is also starting to occur at the mainstream level. As wisdom would have you know, sound capital is the means to sustain nearly all components of living in a state of motivated happiness. When you don't have value and you don't bring value, life as we know it in modern times can be very, very complex. So financial responsibility and capital respect is in decline, pointing to a collapse of economic security. Things like negative interest rates, dilutions of currency units, abuse of debt, insolvency of state and government institutions, promises that can't be delivered, increasing desires for taxation that punishes hard work, talent development, and motivation to deliver quality in a free market environment. While all systems of government are flawed to some degree, thus reflecting the imperfections of human nature itself, some systems are far less flawed than others. Declining political and social stability are a recipe for severe limitations of not only physical freedoms, but financial freedoms as well. Simply based on the study of history and comparing to similar cases, we don't see these trends reversing in the context of our time horizons. Rather than waiting around for the rug to get jerked out from beneath us, we can still act to make sure our situation is a robust one. So what does this all mean? Well, it means that while you still can, that thought and planning should take place to form a strategy to counter these types of threats in an effort to protect and preserve your own work and efforts, which includes the efforts to provide physical and financial security for family and key people you hold critical. Some components of this strategy should include a multi-jurisdictional presence, a diversified asset base controlled in various jurisdictions, tax optimization, and a plan A, a plan B, and a plan C exit strategy in the event you have to take direct action. So we'll share some limited ideas on the following screens and through our guest discussion to point you in the right direction on this journey. So the idea with Beyond Borders, and it's really, this concept is worth strong consideration. Our goal is to have backups set up with the hope that you never have to use them, irrespective of your personal opinions on the issues we face. Being set up and prepared is key. Debating the issues or taking a position doesn't matter when larger important matters are at stake. Our guest today, Jerry Boehme of Boehme and Running CPAs, an accounting, tax, finance, business service provider based in Albany, Oregon. Jerry has been at this business for some time, and he is also the owner of the business that he operates. To put it lightly, Jerry has had a few years in the business. He spends his time also out of Albany, Oregon, when he is not traveling. Most of Jerry's experience here can be found on the upcoming screens. And our other guest, Vincenzo Villamena of OnlineTaxman.com and Global Expat Advisors, a specialized group of services from accounting, tax services, business structuring, and advising. Vincenzo is founder and CEO of the firm, which is based in New York. He spends most of his time out of his company office in Medellin, Colombia, when he is not otherwise traveling as well. More on his experience can be found in the upcoming screens. I've vetted their services. I've spoken with both of them on multiple occasions and used their services personally and have no reservations about their experience or expertise. They have not paid to present for this event, nor have we paid them to join us. They are here because I believe they bring strong value to a complex area of financial ideas and regulatory compliance, something at some point we all need help with. So with that, Jerry, I'd like to start with you. Can you please give us an introduction of you, your background, and tell us a bit about your firm?
Hi, Andrew. Thanks for having me here. A little bit about my background. I studied business administration at Oregon State University. This was a concentration in accounting and a minor in computer science. Graduated from Oregon State in 1982 and became a CPA in 1985. I worked at the firm until 1999. Then I purchased the firm and have been the sole owner for the last couple of years after a couple of partnerships in between. I just completed my 36th year in public accounting. The firm itself is a pretty small by number of people. There's one other CPA, and I do have 5 paraprofessionals. The volume we handle is pretty extensive, however. We do about 1,500 individual income tax returns, as well as about 300 entities, such as LLCs, S-corps, trusts, corporations, estates, etc. We also do about 200 payrolls a month and bookkeeping for the clients that we serviced. So it's a pretty busy place most of the year.
Well, thank you, Jerry. Vincenzo, can you tell the audience a bit about yourself and also your background and talk about your firms?
Sure. No, thank you for having me as well. Essentially, I got into this about 14 years ago. I mean, I went to school in Michigan and, essentially sort of started at PricewaterhouseCoopers, just like, most people in the Big Four, and I got to work in a variety of roles there, right? I mean, I did some taxation, I did audit, and then I did some valuation. And from there, I actually went on, did finance and private equity for a few years, and then ultimately, found that it wasn't really my cup of tea, if you will, and went back to tax first at Four Corners, and then founding my own firm, Online Taxman. And so, with that independence, I've essentially decided to, have a remote firm. And in doing so, we specialize in, expats and just offshore structuring, right? So, Americans that want to live abroad, invest abroad, retire abroad, and doing all of the tax planning and tax compliance for those individuals, as well as people that want to move to the States or invest in the States as well. So most of the clients we serve are have some sort of international flavor to their taxes, or like I said, we're sort of helping getting our hands dirty with offshore structures and trusts and all that sort of stuff. And with that, I picked up a few languages, so Italian, Spanish, Portuguese, and English. And like you alluded to, essentially spent time between Medellin, Colombia, New York, and then just traveling other parts of the world.
Well, thank you both for the information. I want to get on to some initial conversation here and talk about business setup and establishment. First, within mostly the U.S. Jerry, I want to go to you. Can you give us a few key ideas as to why it makes sense for people to have a business for both liability and also cost effectiveness?
Well, the U.S., like most of the world, was built with small businesses. Every business started small, obviously. Some have grown to be enormous, and others didn't have any desire really to grow at all. They were really looking to provide income for themselves. Um, there's a great variety of reasons to start small businesses. The first one is obviously you can control your own destiny, so to speak, your own income, those types of things. But more so, there's also a great flexibility in time. There's tax advantages that that you should be aware of and can implement. You can do a very good job of limiting your liabilities and or your debt exposure, depending on the structure of your business. And the thing to remember though is that you have to have a business purpose, and the intent, according to the IRS, is you have to have an intent to make a profit. Of course, they don't explain what purpose and intent means. So there's a lot of flexibility for people to be able to use these entities in a lot of their planning.
And Vincenzo, any comments there as to why people should have a business structure?
Yeah, I mean, I think again, it's like Jerry said. I mean, I think it's a matter of a, formalizing your business. B, sort of looking at what is the purpose of your business and what is the optimal structure, right? So whether it's sort of looking at a particular state or even a particular country, I think everyone has to sort of go into it as far as, well, what's the purpose of the business? What are the goals you're trying to accomplish? And then, of course, work with a professional to accomplish those goals and do what the appropriate business structure might be.
Now, Vincenzo, I want to ask you a little bit about U.S. state jurisdictions for starting a business. What do you see as some of your favorite states to fire up a business in the U.S.?
Yeah, so I mean, at first it does sort of depend on where your business is located, right? So, for example, I mean, obviously, if you're living in New York and that's sort of the predominant location of the business, then of course, New York would be a place to start it. But if you have the flexibility, or if, let's say you had a business across multiple states, then a couple of the ideal states that we generally operate in are Delaware, right, which is sort of the classic place where it's a very business friendly state, zero tax rate, etc. And Wyoming. Wyoming's kind of come up as another very business friendly state. Has less fees and actually it's a little bit easier to open than Delaware. Another state that we look at for secrecy and the ability to, it's a little harder to subpoena in that state, is Nevada. Nevada has higher fees, but again, really depending on the person's needs, those are sort of the top three states. I mean, there's some other ones that we've worked with before, but I'd say those are the top three. And then the other thing to note is that if again, you do a business across multiple states, then, regardless of where you open up as a jurisdiction, you would still have to apply as a foreign company doing business in each state. So if you have a Delaware company and you're doing business in California, let's say, you have to apply as a foreign company, meaning Delaware, doing business in California.
Right. And Jerry, what are your thoughts on U.S. state jurisdictions to house a business?
Well, a lot of these, and Vincenzo mentioned a lot of the states that are friendly to the individual taxpayers are ones that have resources from other places. He mentioned Wyoming. There's a lot of oil revenue that comes through Wyoming. Therefore, it tends to be friendlier to the individual or the small businesses. And I think that those are things that are very important when you go to look at it. when you've got tourism and those kind of things as your number one source of revenue for the state, they're going to hit the individual taxpayer significantly harder. And you see that in California and a lot of those places. But if they have outside revenue, Nevada has the gambling, Wyoming has the oil. They tend to be friendlier for the small business guy.
Outside of the U.S., Vincenzo, what jurisdictions do you favor today for setting up a business, and what are the reasons you see for doing so, even for people that spend most of their time even in the United States or in their home country?
I'm sorry, so what was the question again?
Outside of the U.S., what jurisdictions do you like for setting up a business, and what are the reasons you see for doing so, even for people who might even still spend a lot of their time in their home country?
Outside the U.S., again, it depends on what the needs, but some of the big countries that we look at are obviously the ones that have low tax or no tax, that we could easily set up banking for. So even though it's a little shaky, Hong Kong is one place that is an international financial hub. They have really good banking there. Even if you set up in Hong Kong, you could potentially get a bank account in Singapore or other places. Singapore we like as well, but it's a little more complicated, a little more costly. In Europe, we look to a place like Malta or Luxembourg. But again, Europe is also costlier, so it depends on sort of where you're doing business. What are your banking needs? What are your credit card processing needs? And then sort of going to this side of the world, some of the island countries like BVI are good for, again, setting up a business. If you're looking for asset protection, then we look to Nevis or Belize or Cook Islands. So the point is there's no cookie cutter approach to any of this. Domestic or international, right? It really depends on your needs and your specific situation. And yeah, ultimately, what are you trying to accomplish? What are your goals?
Right, and I would add Panama to that list as well as for one more for people to consider. Now, Jerry, what have you found to be the most important reasons for U.S. people overseas to ensure they have their own international business?
Well, the problem in the U.S. is obviously you're inundated with red tape. The IRS code, I believe it's 2,600 plus pages now, over $1 million long. Once you've got a business, you've got to figure out how to comply with all the regulations and code sections. And that's at the federal level, not talking at all about the state levels that we mentioned earlier. The taxes in the U.S. on top of that, they hit businesses in a variety of ways. There's, you get hit with the income tax, sales tax, business and occupation taxes, real estate, occupancy tax, individuals with the estate, Social Security taxes. The list just never seems to end as far as the way they're trying to part you from your money. Obviously, this list isn't complete. There's a number of other taxes that go with that, and I think that's one of the reasons why you see so many people now looking to open up and do business overseas.
And Vincenzo, what do you see for people considering banking relationships outside of their home country? Highlight some of the key reasons why people would look at that, and also what jurisdictions would be a consideration for more sound banking.
Yeah, I mean, for banking, it's well, first off, banking has become increasingly more difficult over the years, and so depending on what jurisdiction you open in, will also reflect sort of where you might be banking at. And what I mean by that is, again, if you open up in Hong Kong, then you'll probably be able to get a bank account easier in Hong Kong or Singapore, et cetera. Whereas if you were to come with like a Belize company to Hong Kong, they'd probably look at you funny and ask you where Belize is, right? So it sort of depends on where what your ultimate goal is. For example, I mean, there's places in we open up bank accounts, just for holding money in the Cook Islands, but that's, let's say not the ideal location for operating a business and doing a lot of transactional work, sort of, day in, day out. So again, it does depend on what your goals are, and ultimately, just also be prepared for a lot of paperwork. The KYC, which means know your client, um, regulations and process, takes a long time these days. And when I say a long time, it could be anywhere from a few weeks to a few months to even 6+ months. And so, of course, like I said, banking is becoming increasingly harder. It's not it's not sort of as secretive as it used to be. But of course, again, it depends on potentially what you might where you might be opening from an asset protection standpoint, among other factors.
Right, and I certainly agree. It's less and less attractive these days. There are still a few good places and a few good banks out there for international purposes. Certainly you're absolutely right about Belize. A lot of challenges there. A place like St. Lucia is also a good option for people to consider too. That is reasonable. You can of course go back to the kind of the good old steadies like the Caymans and Bermuda and British Virgin Islands. So there's certainly some options there. Now, Jerry, can you speak of U.S. filing requirements for U.S. citizens that need to comply with regarding financial accounts? Can you kind of speak to some of the international requirements there if you have something outside the U.S.?
Well, there's once again, the U.S. is going to get involved in everything they can, and they try to make sure that you are self-reporting. For the individual, there are reports, and I'll abbreviate them. There's an FBAR, there's FinCEN, there's those types of reports that the government wants. The U.S. itself is a self-reporting taxation, so they depend on you to report your own business, so to speak. The issue there is that they have severe penalties that they like to throw on there. So if you don't comply, they will basically chase you down and create a lot of headaches for you if you don't comply with things that they would like you to do.
And Jerry, what have you found to be the most understood unknown method to reduce your tax liabilities within the U.S. and maybe even outside the U.S.? Can you share with us, at least give us one idea if you can, and some details here for the audience on how you found to be some misunderstood methods that really do work?
Well, there's a lot of things that people can do. The choice of entity is really important, and I'd like to just circle back with what Vincenzo said a couple of times, is that there's no cookie cutter for this for anybody. It's really important that you take and you're able to do your groundwork with the professionals that you're working with to come up with a program that works for you. If you're taking something off the shelf, most of the time you're going to end up with some headaches with it. So circling back, there's a number of entities that have some tax favored individuals. I like businesses in an S corporation in the U.S. I think that there's some very good advantages to being able to draw a salary from that business, take distributions, and control what some of your tax liabilities are there. I think that a lot of people like LLCs because they're easy to set up. What we've seen is a lot of LLCs that have then been taxed as S corporations, and I think that has a lot of merit. But I really like the ability to, once again, if you've got a business purpose, to be able to run those expenses and really control to a certain degree the U.S. tax liabilities that are associated with them.
Now, Vincenzo, I want to ask you, same to you, what strategy is one of your favorites to reduce tax liability if you are someone living and working in the U.S.?
I mean, I think Jerry nailed it with the S corp. I think the S corp is a big one for people that are have their own business, if you will. Now within the S corp, there's a few sort of underlying strategies, right? Like putting a solo 401k together. There's even something called a defined benefit profit sharing plan, which allows people, and I've seen clients literally put away hundreds of thousands of dollars into basically a retirement plan um, via their S corp. Um, there's other sort of, I mean, you could do land easements if you're in the United States, where you buy parkland and you donate it, and then that could be a big charitable contribution. So it kind of depends on on one situation, meaning if they're a contractor, or if they have their own business, or W-2, if you will, especially in the United States, to to optimize.
Okay, and switching gears over to the competition of states. Vincenzo, can you tell us a little bit about your thoughts on the kind of the most burdensome states in the U.S. from a tax standpoint? If a person was seeking to reduce their state tax exposure, what one state would you recommend they consider?
Yeah, that's a good one. I mean, I think a lot of people, and you see this, right? I mean, you see this a lot now, where a lot of people are moving out of, the New Yorks and the Californias, to no tax states, right? So you have, essentially Nevada, Texas, and Florida are sort of the biggest and most popular no tax states. And so, I see a lot of people that are moving to those states from high tax states. And, when I say move, you really have to sort of show that you're cutting ties with your former state. So now they're selling a house or a business, and more importantly, showing that you're reestablishing your ties with this new state, meaning voter registration, driver's license, being able to show that your doctors are there, your religious organizations or your community memberships are located within this new state. I mean, we've gone as far as having somebody sort of take a picture in front of their moving van, as of with the daily paper in front of it to say, hey, as of this date, I officially moved to Florida, let's say. And like I said, I mean, these states are greedy. I mean, I see California all the time, sending out letters to people trying to get their tax income, because I mean, they're broke, right? And they're just being desperate. And yeah, like I said, I mean, I think it's, if you cross your T's and you dot your I's and you do it the right way, you can 100% get out of taxation in some of these high tax states.
Right, and yeah, a lot of good points there. And also, whether you're leaving, if you have a mobile job that is mobile, or if you can become a contractor consultant to your former employee or whatever it might be, or employer. And of course, presenting that case is really a key piece of that whole process. Jerry, how about you? Do you have any comments to add, or a favorite state?
No, I mean the states are the states that are going to be lower taxed. The documentation is just absolutely critical for that reason. And I had a client that moved out of Oregon and tried to set up in Nevada, and they went back after his cell phone bills and said, hey, your usage is still on these days in Oregon, and we are going to go ahead and tax you anyway as an Oregon resident. And because he just didn't have all of the documentation set up that he needed to have done. And so if you're going to make that move, and I think you see a lot of people that are doing that exact thing, you got to make sure that you have done your documentation and your due diligence. And I tell people, why would you live in Palm Springs when you could live in Henderson, Nevada? I mean, you're going to save 10% of your tax bill. The other thing I also see is there's a lot of cities around the country that will add on their own taxation as well. New York City obviously is the obvious one, but people are moving out of those areas because they don't believe that the dollars that are collected are spent wisely or whatever. And so they're going to places where taxes are reduced.
Yep, absolutely. Key points, and there's no doubt they're getting more and more desperate as the days and months and years wear on. Well, let's move over to investment tax efficiency. With regards to real estate, Jerry, what strategy would you highlight for the audience regarding capital gains on real estate, both internationally and also domestically in the U.S.?
Well, it's been proven year after year after year for decades and centuries that real estate is a proven way to grow wealth. And the reason that so many people use it, at least, I mean, the majority of it in the U.S. is because the U.S. tax laws does have great favoritism towards real estate. And you know, my belief is everybody should have a small business. They should be a farmer or they should own real estate. And it's because of the tax codes and what is allowed with this. You can take deductions against current income if it's a rental property. They allow you to depreciate, take your mortgage interest, those kind of things. So you're paying down your mortgage with someone else's money while your appreciation is happening. If you decide to sell, you can enter into a 1031 exchange to be able to defer that and upgrade your property to something. Maybe it's a location that you want that's better. Perhaps it is, instead of an apartment complex, it's bare farmland. All of that is tax favored in the U.S. And then obviously there's pitfalls to all of these things, which is why you need to certainly have a knowledgeable professional to help you work through this. You know, the real estate ownership itself is great. If you have a tolerance for tenants, you can certainly make a lot of money owning and trading and buying real estate. And this isn't just in the U.S. that a lot of this applies to. Capital gains is going to be the same no matter where in the world, because U.S. taxes globally your income. So that's one of the caveats that you have to be aware of, is that the U.S. does tax global income. And if you're a U.S. citizen, if you have a property that you sold in Spain, you are going to get taxed in the U.S. on it. So there are some things that you can use, and I think we get into that a little bit later to be able to help mitigate some of that, but something to be aware of.
Well, it sounds like Vincenzo is working on upgrading his piece of real estate with the background noise that I'm hearing there. So it looks like he's got a new investment going right now. Vincenzo, any points to add to what Jerry said?
Yeah, no, I'd agree with Jerry. You know, again, I think the 1031 exchange is great. That's something that you could do both in the United States and abroad. Meaning that, you know, you could sell one property in the United States and then, you know, buy a new property within 180 days in the U.S., or you can also do that abroad. However, you can't do from U.S. to foreign or foreign to the United States. So you can, you know, hold the property in Panama, sell it, and buy a property in Colombia within a 180-day period, but you cannot, you know, sell that property in Panama and buy it in the United States. So and also piggyback off Jerry's other points. I mean, he's right. If you no matter where you have your property around the world, it is still subject to U.S. taxation. You still have to report, you know, your real estate, your rental income. You still have to report if you did do a capital gain. Now, you might be able to take a foreign tax credit on the sale if you paid tax in another jurisdiction, but you would have to report it.
How about the use of a business entity to have? What are the key advantages here? And let's speak to maybe a foreign entity. If you have capital gains through that foreign entity on an investment, can you eliminate certain taxes given you've left the gains within that company?
Not capital gains. I mean, there's ways to use foreign entities to sort of structure wisely for for an active business. But capital gains or any sort of passive income, you know, if you use a foreign entity, there's no tax advantage per se. There's advantages with asset protection and probate and other ways, but not actually for optimizing your tax situation, if you will.
Right. And Jerry, let me ask you, what are your thoughts on, and I know you mentioned a few points before, what are your thoughts on using a business to house your investments? Is it really the only way to go?
Well, I think that there's certainly some great advantages to doing it. The thing that you need to be careful of is the type of entity that you select. Within the U.S., obviously, partnerships, LLCs, S corps are all what's considered pass-through entities, and and so you don't pay a tax on the company income that flows through to the individual, and they're taxed at that level. I'm a big fan of LLCs to own real property because of the limits of liability and the flexibility of distributions that can be involved. I'm more of a fan of the S corp for businesses because of some of the savings that can be involved there. I'm not a huge fan of the C corps just because ultimately at some point it's going to be double taxed, and we pay enough as it is, and putting yourself in that kind of situation just doesn't make sense.
Okay, Vincenzo, how about from an individual standpoint, maybe an individual investor standpoint, what is a key strategy that an individual investor should use to help offset their tax bill?
From an individual investor standpoint, again, I think it's from a passive income perspective. There's not a lot you could do other than, of course, the 1031 exchange that was already discussed. Maybe also sort of harvesting your gains or losses, so tax harvesting, meaning that you essentially time them, within the tax year, so to speak. And I mean, we do a lot of planning again on the international side, where we might put assets in the name of a non-resident alien spouse, or even a family member, a confidant that again is not a U.S. citizen or fiscal resident, because by doing so, it doesn't fall under the U.S. tax net, right? I mean, if you're married to a non-American and they don't live in the United States, they don't have a green card or anything, again, you can't put assets in that person's name, and then those assets are not reportable to the U.S. government, nor is the income, and that's a very efficient way to tax plan. Of course, you want to trust your spouse, but if you have that figured out, then yeah, then you're more than fine doing that.
And Jerry, is there another key strategy you want to mention on the subject of real estate, maybe stock gains or any of that?
Well, the one thing with real estate is I want to make sure that the 1031 we've been talking to, and in my opinion, real estate's just a fabulous investment. 1031 is only available to real estate. Like kind exchange is the code. You can't do that with stocks. You can't do that with precious metals or anything else. Those aren't considered like kind. So I just want to make sure and clarify that. If you're running your investments through an entity, say you've got an LLC that you got your investments through, or an S corp, something along those lines, the biggest thing is that don't miss deductions. The IRS is never going to come back to you and say, "Hey, Mr. Taxpayer, you should have deducted these expenses." They don't do that, and so the top line is going to be pretty easy for them to tie out because of the documentation you receive. Here's what your sales were. Here's what your dividends were, or whatever on the investments. But you want to make sure that you got, your on cost basis, that you have all the fees that went into buying and or selling those investments. Make sure you capture all of those types of things, and that's certainly going to go a long way to help you reduce that tax liability.
Well, let's talk about precious metals for a moment, such as gold and also collectible items that are a store of value. Jerry, could you highlight for us maybe some of the tax and reporting ramifications of holding these instruments?
Well, the gold and the precious metals, that's a very overlooked part of investing. A lot of people just don't think of those as an investment tool, mainly because they don't create any dividend. There's nothing in that regard that they can get, so they really dismiss it as an investment. But I believe that truly diversified investors are going to take advantage of gold, silver, platinum, whatever the investment is. There's a number of ways to hold it. The difficulty becomes that record keeping and your documentation. Once again, you've got to prove to the IRS that you bought it at X and you sold it at Y. They have no way of knowing with a lot of these precious metals, what you pay. They can't track it, and the government does not like investments that they cannot track. So I think that there is a lot of merit to holding it. The issue that I have with gold, especially if you're going to hold gold yourself, is the value of it. You're not going to take it down to the grocery store and buy a loaf of bread with a 1 ounce coin. Silver and some of the other ones are at a lower denomination, so there's a little more flexibility. But once again, I really believe in the diversification of those kinds of investments.
Right. No, certainly, and certainly worth something to look at. And the wealth protection side of that, even though it may not pay a coupon, is really next to nothing still today, even though there's been attempts by other methods and vehicles to try to compete. Now, Vincenzo, comments on gold as a store of value, and what is one of your favorite vehicles for doing so? Is it a storage service, a physical holding in your possession? What are your thoughts on gold and some of the associated reporting?
Yeah, no, I mean, I agree with Jerry. I mean, I think gold is a great asset class. I think it, hedges some other, currency risk, et cetera, and should be a part of, anyone's portfolio, at some level. Now, a few things that people might not realize about gold is one, it's taxed as a collectible, right? Which means it's not, if you buy and sell gold, it's actually taxed at a 28%, I believe, which is a collectible, which is different than normal capital gains tax rates. Jerry also had a really good point about the sort of record keeping. I think that is important because if you don't keep good records, then the IRS will just automatically assume that your cost basis is zero, and so you will obviously, which of course no one gets called for zero, but if you don't have records otherwise, then they will just assume that. Um, and then finally, to your question about storage, um, depending on how you store golds will also depend on whether you would need to report just owning gold to the IRS, right? So if you have gold in a safe deposit box or a foreign storage facility in which you do not have the key, then that gold is not reportable to the IRS. Whereas if you own gold in a foreign financial account, like a gold money or Perth Mint, then that gold is reportable to the IRS. So, again, to sort of go back to what was said prior, the U.S. does have very strict reporting requirements for any sort of foreign bank accounts or foreign financial assets, right? So if you have bank accounts, if you own stock in foreign companies, all this stuff really needs to be reported to the IRS. Now there are different thresholds, et cetera. But for those who don't want to report all of their overseas investments, then really gold is one of the main ones that you don't have to report. The other ones being any other sort of collectibles. I mentioned if you have assets in a foreign spouse, that's not reportable. And then finally, foreign real estate in your name is not reportable to the IRS. Now, of course, you have to report any income that you earn from foreign real estate, but if you just own a house somewhere, that's not reportable. So gold again is a great asset, and it's also nice to have something that the government doesn't necessarily have to know about if it's the appropriate circumstances.
Now, does the if you have it in your physical possession, how does that count? Not reportable?
Yeah, it's not reportable.
Okay, and yeah, I think it's key there. I mean, when in doubt, we always like to advocate report, and if you do that, you're taking the safe way because the consequences if you don't are just too great to take the risk. So always report. That's a better thing to do, and of course, find people like yourselves to get good advice to make sure you're doing it right. Now, I'd like to add a comment here for the audience. I would suggest the audience take a look at a service called Silver Bullion based in Singapore. We've not been paid to promote this business. However, we are a big fan of the services they provide and how they provide it. We do use the service. Basically, you can purchase and store metals at a very reasonable cost. The storage fees are based on weight, not value, which is fantastic. And then also, you can borrow and lend on your holdings and earn enough of an interest rate to actually pay for your fees. And so it's really a fantastic service. It's fully insured. It's based in a good jurisdiction, being in Singapore. There's just everything about it is fantastic. Photos of your parcels and the whole mess is really just fantastic. So I'd recommend the audience take a look at that. Well, let's move on to another topic, guys. Moving on to favorable tax jurisdictions internationally. I think we touched on this earlier a little bit, but Vincenzo, can you tell the audience about tax advantages about living and having a business specifically in the U.S. territory of Puerto Rico?
Sure. So yeah, there are a lot of advantages of moving both abroad and to Puerto Rico. Puerto Rico does offer, I would say, the biggest advantage, even over moving abroad in some aspects, because there's no capital gains tax. So if you are a stock trader, and this is where you see a lot of hedge funds and financial services firms based out of there, because again, if you're trading stock, Puerto Rico is the only place as an American where you could move and not pay capital gains tax. So that's a huge advantage that's unparalleled and not offered anywhere else. On top of that, if you are an entrepreneur or a businessman and you set up a company in Puerto Rico and you're outsourcing services in the United States or anywhere really, in the forms of whether it's marketing, accounting, what have you. If you're outsourcing services and you hire a couple of local people, you donate to a Puerto Rican charity, you essentially show that your base is in Puerto Rico, right? And by showing your base in Puerto Rico, you need to be spending over 183 days in Puerto Rico. So assuming that you fulfill all the requirements of being a Puerto Rican tax resident and opening up this company there, et cetera, then you would earn 4% tax on that jurisdiction or on that income of the company. You would pay yourself a reasonable salary, which is pretty much in line with market standards. It's sort of the same rules as paying yourself a reasonable salary for an S corp. That salary, of course, is fully taxed. You would pay Social Security, et cetera, on that. However, anything over that amount, right, would be you could take as a dividend from the company, and that would be tax free. So to give an example, let's say somebody has a company, they're earning $200,000. That 200 and of that 200,000, they're, let's say, taking a $60,000 salary. So that $60,000 salary again is fully taxed, but the 140,000 would be essentially a dividend. That would be taxed at zero. Although don't forget that $140,000 net would be subject to a 4% corporate tax. But then you could take that money out of the company, and again, that would be tax free. So, even compared to some of the other offshore structures that we've done, where we could get an effective tax rate of 10.5%, the Puerto Rico tax scheme is a lot more advantageous. Now, of course, there's other things you need to consider, like, okay, the cost of living in Puerto Rico might be higher than living in another country, especially in sort of looking at South America or parts of Asia or even Europe. So that's one thing. Or the fact that you do have to commit to living in Puerto Rico for over half the year. But if you were to analyze your situation and look at these factors, yeah, Puerto Rico would certainly be a great place to look. And of course, you don't have to get any sort of residency. It's a U.S. territory. So of course, if you have a U.S. passport, you can live there. Green card holders, etc.
Right. No, it certainly is attractive, even though, I mean, even with the understanding that every now and again you'll be slapped with a hurricane, but nonetheless, it's still very attractive, that whole scenario and how that continues to be a prevailing option. Now, on those same sorts of lines, uh, Vincenzo, let's say I'm sitting on capital gains from investments in the markets and I want to redeploy that capital. How can opportunity zones help me achieve this tax advantage?
Yeah, so opportunity zones, again, when you talked about personal investing before, it was a good point to bring up. But essentially, if you're sitting on capital gains and you sell, whether it's stock or real estate, you can roll over those capital gains into an opportunity zone. And these opportunity zones are around the United States. Um, Nearly the whole island of Puerto Rico is an opportunity zone, which is interesting. But you can roll your capital gains within 180 days into an opportunity zone, and if you keep it in the opportunity zone for up to 10 years, then that capital gain is deferred, and then the opportunity zone, if you sell that opportunity zone investment, then the capital gain from the opportunity zone is tax free. And so we see a lot of people that are investing in real estate opportunity zones, that are investing in opportunity zone businesses. And so by keeping your capital gain opportunity zone, one, the capital gain from the opportunity zone is tax free. Two, your original capital gain is essentially deferred for 10 years, so you sort of have the time value of money there. And then number three, I think it's after year 8, your capital gain on the original investment is actually reduced by 15%. So the opportunity zones were created by the Trump tax plan to essentially encourage investment in areas that might need a little bit of an economic boost. And that's essentially the point. Now, the interesting part is, like, everything in politics, there was a level of gerrymandering and sort of rigging, if you will. So there are areas that are truly in need of help, and some opportunity zones are generally pretty decent areas that due to political clout, if you will, were named opportunity zones. So again, Puerto Rico as a whole island, essentially, there's this small sliver that's not. But Puerto Rico is essentially an opportunity zone. I've seen it in parts of New York, like Long Island City, that are opportunity zones that shouldn't be. By Aventura Mall and Miami is deemed opportunity zone, which is a decent area. So, there are even areas that are deemed opportunity zones that maybe shouldn't have been, or sort of questionable. But again, I mean, I think there's a lot of opportunity and a lot of potential advantages to seek out in rolling over your capital gains into these opportunity zones and their associated projects.
So is there let's assume I have capital gains in, say, stock investments. Can I take those cap gains and roll those over into an opportunity zone? Is that correct?
That is correct. Yes.
Yeah, that sounds good. Certainly another attractive option. Um, Now, moving on here, Jerry, please share with us, the audience, first of all, any comments you might have on what we just discussed, and then also, can you share with the audience maybe an international jurisdiction or two that you like, not only for living, but has a favorable tax policy when you have wealth that's generated outside of that country?
Well, I think that with the opportunity zone, first of all, who would have thought that taxes had anything to do with politics? But the tax codes in the U.S. are every bit as much about social molding as it is about tax collection, and people don't realize that. And I think that the opportunity zone is certainly an example of that. My suggestion there is, if you're interested in that, get on it sooner than later, because I think that you're going to see technical corrections acts and tweaks and those kinds of things over the next couple of years that perhaps is going to limit some of the value than is there when it first came out. So that's just an outside observation. I I think that like a lot of things, there is going to be some tweaks to that, and the way it is written now is very, very good for taxpayers. So I think going kind of shifting gears to the foreign, I think we hit on a lot of the foreign countries that are good and work well. It seems to me that you've got the old standards that are good, that have been around a long time, that create a lot of their country's wealth because of the way they allow investing in their countries. And then I think a lot of the emerging countries that maybe don't have the sophistication, it's easier to move. I've got clients in Vietnam, and boy, the tax rates there are minuscule compared to what my clients pay in the U.S. And so I think that a lot of the countries we've already talked about, the Belize and those types. Obviously, a lot of the Caribbean countries. Those are all good places to look.
Right, and absolutely. There's a number of countries that welcome foreign folks to come into the country, get residency, and they don't levy tax on your income generated outside of their country. They don't levy tax on that, so it's really in a lot of cases fantastic. I mean, looking at Central and South America, there's a number of countries that offer that. Panama is certainly one of them. Nicaragua is also one of them. I believe Colombia is as well. So I think that's key there. Now, Jerry, can you just speak a little bit more about, from a tax perspective, can you kind of tell the audience about some of the filing requirements they would have if they're living full time outside of the United States? Tell some of the highlight items that people can look forward to if they're living outside, like the foreign earned income exclusion.
So basically, there's a couple of things that they look at. One just kind of is they don't allow the double taxation, just like states don't allow a double taxation. So if you pay tax in a country, say Vietnam, you will then be able to take that as a credit on the income to the U.S. so that you're not going to get double taxed on those dollars. That doesn't mean the rates are going to be the same, however. So if you are in a country that levies a 5% tax and you'd pay 25 in the U.S., you'd get a credit for that 5%, still have to pay the balance of that to the U.S. So there is the foreign tax credit. That is good not only for expats and people living overseas, but obviously that's investments with companies in the U.S. that say you own BP or something like that generates a foreign tax on their dividends. You can take that as well against your current taxes. The foreign employer compensation deduction, basically any earned income that you have that is earned overseas, up to it's almost 106,000 for 2019, is excludable from your federal tax in the U.S. The key there is it's got to be earned, and then there's a number of other regulations that you have to qualify. You actually have to have lived there or been out of the U.S. for 330 days in a given 12-month period, and some other requirements there that you have to have. There's also, depending on what your investments are, I mentioned earlier, the FBAR, the FinCENs, those are all reporting requirements that you potentially would have living overseas when you file your U.S. return.
Now, Vincenzo, tell the audience about, who might not be familiar, international revocable trusts and irrevocable trusts. Can you tell us about these vehicles, maybe a jurisdiction or two you like for these, and what high-level advantages do they have?
Sure. So irrevocable trust essentially is when you are giving up your assets into a trust, a foreign trust, if you will. And what that means is that you no longer have access to these assets. So you no longer have a right to those assets, which is a very difficult concept for people to understand or grab, right? Because obviously these are assets that you've worked your whole life for, and you are putting it into a trust. And of course, you have beneficiaries And you sometimes have sort of, things that you can do to still maintain the control over some of the investment decisions, like a statement of wishes, et cetera. But the main concept of an irrevocable trust is that you are putting away these assets into a trust you no longer have access to it. And of course, the question is, well, why would someone do that, right? And the reason being that for both asset protection purposes, right? Because if you put something in a trust and it's no longer yours, then if somebody tries to sue you, then they can't sue you for those assets because they're not yours anymore, right? So that estate planning and succession planning are some of the reasons, as well as just, again, if you do have heirs and you want to, again, you want to sort of control when they'll have access to money, et cetera. Um, that's the advantage of an irrevocable trust. And so that's why we do that a lot more than revocable trusts. Revocable trust, you do sort of still have access to your assets, and it's not as key. I mean, revocable trusts are still good for things like probate, et cetera. But a lot of times, if someone is going to do a trust, we recommend doing the irrevocable trust just because of the the advantages of asset protection, estate planning by putting assets in that trust. And we do that a lot in the Cook Islands, Belize, Nevis. These are all sort of um, the standard countries where there's very strong asset protection laws.
Right. No, I think that's great, and it's all about owning nothing but controlling everything. And I think
Totally.
that when you talk about trusts like this, I think that's a key consideration, and it really does make a lot of sense, especially if you care about where your wealth goes after you might, die. Um, do you want that going into the hands of irresponsible people, like governments and certain states and so forth, or do you really want that making sure that it goes to the right people in a protected fashion? So I think that's key. Now, Jerry, are there any comments on trust in general? And if you were to use one, where would you hang your hat internationally, or would you also can you recommend maybe a U.S. domestic setup if you feel like that's credible?
Well, there's a variety of different trusts that are available. The big 35,000 foot level obviously is revocable versus irrevocable. The ones that I see my clients use as far as the irrevocable, a lot of them are around charitable giving, and they'll take and there is charitable remainder unit trusts and charitable remainder annuity trusts and charitable lead annuity trusts, ways that you can take and get a charitable deduction currently. And some of them provide an income stream, some of them don't. Some of them you can name the beneficiaries on the backside while the current cash goes to the charities. I see a lot of those type of things. And those are all irrevocable and out of your estate. Another one that I see a lot is an ILIT, which is an insurance, an irrevocable insurance trust, where they'll put an insurance policy in there and then basically gift the premiums to their kids or whoever the beneficiaries are. And so that there's cash available on the backside to pay estate taxes if there are any, or to just get some liquidity to kids upon death. So I see a lot of those type of trusts. I think the important thing there, whether they are international or within the U.S., is once again making sure that it is set up in the method that you really want it to be, and that makes that decision whether it's revocable or irrevocable. The revocable is really just a way to avoid probate, and there's some complications with all of those things. But certainly there's some huge benefits if they fit into your overall package.
Well, gentlemen, we're about just under an hour and 10 minutes in, and we're getting close to wrapping up. Appreciate you guys taking the time. Now, I want to touch on second passports for a moment. Vincenzo, question to you. What two jurisdictions do you like for second passports? And can you give the audience highlights on why? Maybe the approximate cost just ballpark, and maybe how long it would take to obtain?
Sure. Yeah, second passports is there's a real range as far as costs and time and commitment. So one country that we see a lot of second passports is Panama, just because it's very easy to get permanent residency via the Friendly Nations visa. You only have to go there 1 day a year to sort of maintain that permanent residency, and I believe it's after 5 years you can apply for a passport. The Caribbean countries have a lot of passports, for sale via investments. So you have St. Kitts, Grenada. I believe those countries offer visa-free travel to Europe. By investing several $100,000, you can get one of those passports, either via real estate or just sort of a contribution. And we do see a lot of residency in Georgia, the Republic of Georgia, of course. That would lead to a second passport. Within Europe, there is a program in Portugal called the Golden Visa Program, where you can invest $500,000 in a piece of real estate. That would give you permanent residency that could lead to a passport. There's also similar programs in Malta and Bulgaria but those are higher tags. I mean, they're upwards of $1 million that could lead to a second passport. So it really sort of depends on what you're trying to accomplish or what's important as far as visas, etc. I mean, there's also a lot of passports by bloodline, right? I mean, Italy, Ireland, Poland. I mean, these are all passports that if you have a great grandparent that is from one of these countries, you can, you have to obviously go and trace your heritage a bit, but you could apply for these passports and get them, and of course, there is no sort of investment. So, obviously, yeah, it depends on what you're trying to do, and of course, what you're trying to either invest or spend. But yeah, second passports have really, been a big thing, as we look to internationalize, as sort of the world comes to this globalization movement, if you will, and trying to diversify your citizenship.
Right, absolutely. No, I think you made a lot of fine points there, and it really is a key part of a backup plan, and having access to other places. And then also, of course, it just makes a lot of sense because it leaves you with a lot of optionality and kind of peace of mind, at least in my view. And probably going back to Panama there, Panama is probably one of the more affordable options if you have some time to wait, 5 years or whatever it might be, and you can demonstrate some association. That one can make sense. Is certainly more affordable. The bloodline heritage is also a fantastic option. And if you're on the upper scale and you have some capital to throw around, there's also some even easier options that come with a higher expense. Well, gentlemen, I appreciate the conversation here, and I want to move on to just some finalized topics here. I want to ask you about your direct experience with tax authorities and what issues you've handled for past clients. Jerry, let's start with you. What do you bring to the table there with relation to dealing with tax agencies?
Well, obviously with them, boy, it seems like it's daily. It's probably not that often. The number one thing I find is it depends on who answers the phone. And, if you get that tax agent that answers the phone and boy, he just got married and has a new car and the house is brand new, you're going to be able to work with that guy and get almost anything solved. And you get somebody that's not only had a bad day, but the car's wrecked and the house is on fire and the dog ran away. Guess what? You are not going to have any luck at all with that individual. And unfortunately, it'll get kicked up the ladder, and whatever that first initial blush is from whoever the agent is going to carry a lot of weight. So a lot of it's just a random deal when you're working with the taxing agencies. The documentation is huge. When you can take and provide documents that back up what you say, People don't realize that when you talk to the IRS, all of that is documented by them. So a lot of times I'll go back and, hey, I talked to this agent, always get a name and a badge number, and be able to double back with them and say, hey, I talked to this guy. This is what I was told. It's a lot of it is just patience and and having the documentation to be able to back it up. It's painful for people. There's no question about it. You're on the phone for 45 minutes or an hour before you talk to somebody. I had somebody, one of the agents the other day that's put me on hold and then came back and said, well, I looked through the publication. Boy, I can do that online, guy. That's not what I was looking for, so a lot of patience has to be involved and stuff. And just because they say that you are wrong doesn't mean you are. And so make sure you have your facts and your documentations and be patient. That would be my keys.
Vincenzo, your experience with some of the key tax agencies and some of the matters you've handled.
Yeah, I think Jerry's right. It's a real pleasure to deal with the IRS. It's just, it really does depend on the person. Yeah, and I think that, what I notice is that, you have a lot of clients that, people really get freaked out because, you get a very scary letter, in the mail from the IRS, and with threats and we're going to seize property and whatnot. And what they have to understand is it's a little bit of a process. B, these letters are sort of automatically computer generated, and it really sometimes takes a while to resolve this stuff. I mean, I had one client that he didn't file, or there was an issue with filing several 5471s for foreign companies, and he had a $140,000 fine pending, and we just had to kick it off the ladder, right? It just kept on being passed around the IRS and whatnot, and then ultimately, you know what? I just found a really reasonable person and explained to her the situation, and she eliminated the fine on the spot, right? And so there's a certain level of patience when dealing with the IRS. Given the fact that it is a government agency, there is a lot of bureaucracy, and if one person doesn't work, literally, if you can, then just try again, right? And I think that people just need to understand that when dealing with it, and yeah, having the appropriate documentation, having everything sort of readily available, and really making it just easy for the person, right? I mean, make it easy for the agent to do their job, because if you have that and you're organized and you're succinct and precise and you're really, really nice and pleasant with them, it really does go a long way to getting what you want out of it and for your client.
I think those are all fantastic points. I appreciate you guys adding those insights. Jerry, tell the audience who might seek your services. How can they contact you? What services would you like to highlight for your firm that they should consider, and what the audience can expect just for a ballpark figure of costs, assuming intermediate level situation, and if there are any consulting offers coming from your firm?
Yeah, kind of ran through the list earlier of what we do and kind of the size of the firm and that kind of stuff. We, the bulk of our work is around taxes, and we do a large variety of those. I've got a great staff that has quite a bit of longevity with me, which makes things a lot easier. But mainly ours is around tax filings, and entities and individuals do a number of trusts and estates and those types of things, the filings that are required. Oregon still has $1 million estate limit before it gets taxed. A lot of states do not have any estate taxes anymore. So of course we're behind the curve, but it goes back to they think they need more money. So we do file a number of estate returns every year. The bookkeeping and payroll kind of keeps the lights on the rest of the year, and also provides a great service to our business clients. Kind of makes it a one-stop place for a lot of their needs. What I try to tell my clients is that we're a resource to them. We don't try to fit them into what we do. We try to provide them anything from clients. I've been in this 35 years, and there's some clients, believe it or not, that I've never met. We've done over the phone, we've done through the mail, and I've just never met them in person. There's other clients that we do everything almost within range of what they do for their businesses. So there's a great variety of things that we try to provide. There's certain things we don't do. We don't do audits. We don't do reviews. Those are things that just never have interested me. And I think you do a better job with things that interest you. We don't do offer and compromises. So if you owe the government money and are trying to wiggle your way out of it, I don't do those kind of things. The majority of our clients they're small business people, or they have a couple of rental properties. They're retirees that don't want to go to TurboTax and they want to understand what's going on. So we handle a lot of those. We don't chase down the $20 or $30 million businesses. That's really not our niche. That's not something that we like to do. We like to do the personalized type things. Billing rates. We bill $225 an hour is what we bill, and we bill on an hourly rate. We don't bill by forms. We don't bill by anything else, but just how long it takes. So if you come in and you're organized and stuff, that's going to be a smaller bill than somebody that brings the proverbial shoebox. So you can sort through it, or we can. You've got some information about how to get a hold of me. Our website is very good. It's got a bunch of information on it. It also has contact emails for myself and my employees, as well as our phone number and everything. So that's kind of how you can get a hold of us, and kind of in a nutshell what we try to do for our clients.
Okay, well, Jerry, I appreciate you sharing that with us. Vincenzo, how about prospective clients? How can they reach out to you? What services do you want to highlight? And what, maybe if you can share a little bit on costs, what you can expect for an intermediate level situation, and do you have any offers for the audience?
Sure. Our focus is on generally, like I said, people with an international flavor. And so if you are a U.S. expat, or thinking about moving abroad, if you're thinking about investing abroad, then we can assist in the tax planning and the tax preparation. So again, I mean, whether it's tax protection, or whether it's if you're an online entrepreneur, and you want to move abroad and qualify for the foreign earned income exclusion of $105,000, and potentially set up a company in another jurisdiction and get sort of an effective tax rate of 10.5%, and optimize your situation, then this is the sort of structuring work that we do, and then of course the subsequent tax preparation. So yeah, I mean, I think that's our specialty, and our differentiator, is being able to to help people with these sort of situations. Generally, from a billing perspective, we bill for the tax return on a fixed fee basis, based on the forms, and just the complexity of the return. So how it works is, for people that are looking for tax return prep, we do offer a 30-minute free consultation. You can go to the website onlinetaxman.com and sign up for a free consultation, or reach out to me via email. And in that consultation, you get to know us, we get to know you, and by that I mean we ask you questions to really assess the complexity of your return, and give you a fixed free consultation. If you want to go a little of a deep dive and go into the foreign structuring aspects, and the complexity of that is actually a paid consultation that's done through Global Expat Advisors. Those consultations are $200 for a half hour, $300 for an hour, and that will which is a credit, to your to any future engagement. And that would be, again, for the more complex structuring engagements, and that would be with me personally. Uh, Whereas I have a team working at Online Taxman. So if anyone has any questions, obviously, and on the international side, then like I said, they can reach me at onlinetaxman.com, and we'd be happy to help.
Okay, well, appreciate the comments on that and the information. Jerry, are there any parting comments?
No, I'd just like to thank both of you for putting this together and the exchange of ideas, and hopefully people will understand that there are great opportunities out there, but they need to do it the right way and with the right people. And if you're willing to do a little digging and stuff, you can certainly go a long way in preservation of wealth.
And Vincenzo, what do you have? Any final parting comments?
Yeah, I mean, same. I think, first off, I mean, it was great, great to get on the phone with Jerry, another qualified professional, which is always nice. And, and Andrew, to you as well, just talking through this stuff. I mean, I think that, again, I think, tax planning, is really important as far as being able to save money, and sort of when people look at small businesses and everyone's sort of looking at getting their revenue numbers up and all that sort of stuff, but sometimes it's best to play defense, right, and see what you could save, and taxes is certainly one area that you could save, both domestically or by moving abroad and sort of internationalizing your business. So it's something that everyone, really should be thinking about. And sometimes people don't think about it enough because they're just, scared of the government or the IRS, or maybe that's not their forte, if you will. And I think it's really good to think about this. And now, Andrew, you had some great questions to sort of facilitate this discussion today. So just happy to be a part of it.
Absolutely, and we covered a lot of ground and a lot of stuff in a short period of time. Well, to our audience, thank you for spending the time with us. If you aren't a Smith Weekly member and have joined us for the first time on this event, please make sure you check us out on our website, smithweekly.com, and also via Twitter @SmithWeekly. Please reach out with any questions and feedback. If you've determined that we've delivered some value to you, we always appreciate donations to support our research. The link for donations is shown on the screen. Let's leave it there. I encourage the audience who are in the market for these types of services covered in this event to reach out with both of you gentlemen for an interview, have a consultation, and see for yourself if they can assist you with planning out a beyond border strategy. This was an insightful discussion and attempt to lay out many issues and complexities that we all face regarding finance and long-term wealth sustainability. While much of these discussions were centered around U.S. people, many of the concepts and strategies do apply from people from Europe, Canada, Australia, and elsewhere. So you should consider these equivalent situations. Again, gentlemen, thank you for taking the time to share your insights and experience with us. I want to wish both of you well with your businesses and assisting clients to obtain these objectives. On behalf of our guests and Smith Weekly, good luck with your strategic planning and best of luck navigating beyond borders. Thank you.